Hey, welcome back, everybody. Another webinar here for you for the week. As always, everything we're discussing in these videos is for education and example purposes. Make sure you know your risk tolerance going forward. What we're really looking at in here is we're just waiting on a breakout for corn and beans. Corn has been stuck on D's corn, a range between 475 and 495, call it. The no bean contract stuck between 1190 and 1230. Then obviously we saw that breakout in wheat to the higher side in late April. So the question really becomes, are we going to get a breakout higher, or are we going to get a breakout to the lower side? And we just wanted to cover a couple price projections depending on which way the market decides to move. So here's your December 24 daily corn chart. You can see we have that gap up near 503. Your two blue lines show that the range that we've been in here recently. And then that light blue up at 518 is just a projected measured move of the range. There's some technical analysis out there that suggests you can project a move based off of a recent range. So we just took the high to the low and we came up with a 518 as a potential target. Obviously, that gap fill is another target around like 503, I believe it is. If you notice the purple lines, that would be that same projected move to the downside, bringing D's down to 455. So again, you kind of got to place your bets, but this is what we're considering as we anticipate or look forward to a breakout here on the corn side of things. Going over to beans, again, you've got that gap near 1240, our blue lines representing that recent range that we've been in here over the past few weeks. The light blue shows that projected measured move out of the range to 1267. On the downside, you'd be looking at somewhere around 1158. Here's your July 24 daily Chicago wheat chart. And again, here's how that projected measured move played out coming out of that range trade between 540 and 587 here at the end of April. You can see price went up there, had a little pause. There's some other resistance to the left and then continued on, at which point you could continue to draw some other projections. But for now, I think that's important to just kind of cover what we might be able to expect on a breakout to either the higher or the lower side when you're considering corn and soybeans. So really, like I said, wrapping it up, what direction is this thing going to go? You got to place your bets out here. One thing we do want to point out, though, is that on the corn side of things, we are on week 6 of 10 of our seasonal price program. Time is getting smaller. The window of volatility looks like it's starting to shrink, and we got to ask ourselves, do we need to be 20% sold, 30%, 50% sold ahead? It's going to vary from guy to guy. But as we sit here and talk in the office, we're starting to lean towards rewarding some more sales, because the last thing we want to do is be undersold on a potential for the breakdown rather than a break out to the higher side. Again, going to the wheat side of things too, when you zoom out to a weekly chart, okay, we're still kind of in that upper end of the channel that's been in a downtrend. We've been higher 7 of the last 10 weeks. We've got to ask ourselves if this wheat market's looking just a little bit tired as well. You've seen on our report, we like rewarding the rally and getting some hedges in place, including options at this point, if it fits your marketing plan. If you guys have any questions, let us know. Real brief today. Weather is nice. We know guys are out working in the field. So feel free to reach out to us if you've got questions or if you need to look at any potential strategies. Don't forget to hit that like and subscribe button. Thank you for tuning in, and we will see you again here next week.